Warren Buffett is known to be one of the greatest investors to have ever lived. He came from modest beginnings to build his wealth. Imagine a fortune of over $85.4 billion. Indeed, there is no better way than Warren Buffett's tips on formulating wealth. It is safe to say that his vast wealth is built primarily on the stock market, making him one of the most successful investors. Warren Buffett isn't the only investor we have, but his tips, manner, and rules of investing make him different from the majority. Following his lead in terms of investing psychology and strategies will serve you well in your activities in the stock market. In this video, we will be talking about Warren Buffett's 6 rules of investing. So watch this video to the end, because it will be very interesting. The 6 key rules of Warren Buffett's investment strategy. 1. Know what you're investing in. The first thing to do may be simple, but it's vital. Buffett doesn't make a blind investment, no matter how it is hyped on social networks or in the media. Every investment he does make is always highly calculated and in his area of interest. So if you're planning to invest just like Warren Buffett, you should invest in industries that interest you and you know intimately. Don't just invest just because others are investing. Investing is a process that takes quite a bit of research. If you're not interested in whatever you're researching, it's not advisable to do exhaustive research. On the other hand, if you have an intimate understanding of the industry you're willing to invest in, you know exactly what to look for regarding the factors that drive success within the company's industry. 2. Always fit an investment into specific criteria. This is one thing Buffett does while investing. Even if he believes that a company he's looking to invest in will succeed, he does not risk his money or assets on anything that does not fit specific criteria. To buttress this fact, Warren Buffett has these criteria he uses when determining whether to invest in a company. The stocks must be sensibly priced. As an investor, the first point of interest should be the stock's value. You can use various valuation metrics to ensure you're getting a good deal before investing. Management must be quality. Before you invest in any company, you should understand who's running it. The company must be aggressive with its reinvestments because the capital will be a far more lucrative endeavor. The company must have strong earnings power and be generating compelling profits. 3. Get into healthy financial habits. In a college speech, Buffett said, "Most behavior is habitual, and the chains of habit are too light to be felt until they are too heavy to be broken." He pointed out that among the most important habits, the major one to be formed is how to save money. The biggest mistake you can ever make is not learning the habit of saving properly. That's why he suggests setting automatic reductions in paychecks. It is also helpful if one transfers money into savings or investments to help make this habit regular. He said, "Do not save what is left after spending. Instead, spend what is left after saving." 4. Cash is an investment. As an investor, you must maintain a fair amount of cash, or its equivalent. You should always be ready to be drawn throughout staggering times. We understand that Warren Buffett is a strong proponent of taking advantage of opportunities in the stock market. Still, if he has an opportunity that fits his criteria, he will always be ready to hold his cash. The value of cash has grown faster than the value of stocks numerous times. So, having liquid cash in your pocket makes you take advantage of strong opportunities in the stock market as they arise. If you don't have to settle for a stock that simply won't produce the returns you're envisaging. As such, be highly selective in the investments you make. If you can't find a stock that fits your investing strategy, you can always hold your cash. More opportunities will surely arise soon. 5. Invest in yourself. It has always been Buffett's saying that you should invest in yourself as much as you possibly can. No matter what it is, you shouldn't be idle. He said, anything you do to improve your talents and make yourself more valuable will get paid off in terms of appropriate real purchasing power. When you invest in yourself, the return will always be favorable for you. Unlike assets, one's skills can't be wasted or lost. What you have in you cannot be taken from you. That's the code of investing in oneself. From going to school and improving your knowledge to overseeing training or taking a volunteer post, all these investments will certainly improve one's chances of becoming wealthier. The more skills you develop, the wealthier you can be. It's as simple as that. 6. Set long-term goals. This is another rule you should always yield to. Buffett said the most common mistake people always make is attempting to seize any rising price wave for instant returns. Truly, it does not always work like that. You shouldn't invest all because you want to see an instant gain. Buffett also said it's best to invest with a multi-decade horizon rather than seeking quick earnings. That's the joy of investing, and it will surely yield. And that's all for today, guys, and we hope you enjoyed this video. If you're optimistic about creating wealth for yourself, be sure to subscribe to the channel and give this video a like. Thanks for watching. See you in the next video.